Welcome back, investors, to Ticker Time News. I'm Adam, and Intuit is making a QuickBook hire after the financial service giant reported a beat and raise earnings. Now, given that the company focuses on small businesses and consumers through offerings including TurboTax, QuickBooks, Mint, Credit Karma, and Mailchimp, I was a little concerned that its results could be impacted by a potential pullback in clients' subscription spending in connection with macro headwinds like inflation. The results, while not perfect, were overall quite good, making a case that even as the pandemic eases, small businesses are continuing to pursue digitalization initiatives. I know for small businesses that I've created in the past, QuickBooks has always been a go-to tool for keeping my finances and payroll straight. And the quick integration with TurboTax to file my company's taxes were always super simple. So even as inflation continues to hang around, a subscription to QuickBooks isn't going to be on the top of the list for a cancellation. Now, next quarter is typically the largest quarter of Intuit's year because of the tax filing season, which spurs sales of TurboTax. Consumer Group revenue surged 32% year over year to $3.2 billion. However, it's important to note that there was an earlier tax filing deadline this year. Now, news on the tax front was not all positive. Despite the strong growth in revenue, Intuit now expects overall IRS returns to decline 3% through July 31st, compared to IRS return growth of 3 to 4% the last two seasons. Also, Intuit expects the do-it-yourself category share of total IRS returns to be flat by the end of the year, which is also below expectations. On a more positive note, Intuit now expects TurboTax Live revenue to grow 30% and cross the $1 billion in annual revenue milestone later this year. Moving on from taxes, Intuit's Credit Karma segment saw revenue surge 48% year over year to a record $468 million in Q3, driven primarily by growth in average revenue per monthly active user. Personal loans and credit cards were strong. I must admit that I did have some reservations when Intuit purchased Credit Karma, but it has become crystal clear that Intuit's vision of a robust cross-selling business is becoming a reality. And then you have Mailchimp, a more recently acquired business. Segment revenue rose 7% quarterly to $257 million, fueling much of the 42% year-over-year growth of Intuit's small business and self-employed segment. Overall, Intuit's Q3 results were encouraging, and its Q4 revenue guidance exceeded expectations. This was a bit surprising, given that Intuit was lapping generous stimulus measures from the prior year, which helped many customers to buy TurboTax. Also, an increase in rates may lessen the demand for Credit Karma's loan offerings, but that segment was probably the strongest of all of them. That growth may moderate in the coming quarters, as rates are likely to keep going up. Finally, even though the price tags that Intuit paid for acquisitions of Credit Karma and Mailchimp initially seemed to be steep, I am a believer in Intuit's vision of creating a financial powerhouse with exposure to different areas and lots of cross-selling opportunities. However, even after its recent pullback, the stock is still trading at a lofty PE of 32 times. Rising rates, inflation, a rotation out of tech, and general nervousness about the economy, plus the impact of economic challenges on small businesses, leaves me sitting on the sidelines for this one, at least until the stock pulls back even further. What's your price target to jump in on Intuit? Let me know in the comments below, as your comments help us all to better understand. Do me a favor, click that like button, share this video, and join us in beating this crazy market by clicking the first link in the description. We'd love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.